Hey, what's up you guys? Welcome back. So today we are talking about deep value stocks. Now, what do I mean by deep value? Well, to me, deep value just means that a stock that is undervalued for what it is, and if you were to go ahead and buy the stock, there's a very low chance that you won't make money in the long term. And by long term, I mean like 5 to 10 years. Now, these are stocks that you can just feel comfortable buying and holding, and these are not necessarily the best growth stocks, actually. So, in fact, that there's probably other stocks out there that will make you more money in the short term at least, but if your primary goal is to lower the risks in your portfolio and limit the downside, you want to really go for these deep value stocks. And the purpose of making this video today is just to bring your attention to an effect that I like to call risk drift. So I'm not sure if there's an official term for this or not. I just made that term up, and that's just what I'm going to call it. But to me, risk drift is when the stock market goes up and up and up like we're seeing right now, and you see other stocks that don't go up as much that you own that are in your portfolio, and you go, well, why am I holding these, right? I'm just going to sell these and put my money into growth stocks that are going up way more. Well, what you don't understand in necessary, well, maybe you do, but like what a lot of people don't understand is that when you sell your current holdings for like stocks that are growing up more, a lot of the times that like the stocks that are growing like really fast, they're higher risk, right? They're more speculative bets. So what you're doing is that you're increasing the total risk that you're being exposed to in your portfolio, and your risk level drifts upwards, right? So you're taking on more risk. So this is definitely something that I've been noticing in my portfolio, as well as I've been buying some like stocks that are just like more high growth. And sometimes it does work out for me pretty well, and sometimes it doesn't, right? Because the downside risk is bigger. So what I'm trying to do right now is I'm actually trying to add more deep value stocks to try and lower the risk that I'm encountering and bring that risk back down to control that risk drift. So yeah, today let's go through 3 deep value stocks, and I'm gonna also give my reasoning why as to I like these stocks. Reminder before we begin, I do have a referral link down below for Wealthsimple Trade where you can get a free $10 when you deposit and invest your first $100. If you're more into crypto, I do always have my referral links for Newton and ShakePay, which I personally use both of them myself, and I haven't had any problems. So the referral code for both is down below, and it's $25 for Newton and $30 for ShakePay. So it's a great way to give yourself a boost if you're just diving into the crypto space. Okay, yeah, anyways, let's jump in. Okay, so first up on the list is Facebook. Now, you guys know I've been investing in Facebook for a really long time, and you guys knew that this one just had to be on here, right? So I've been pounding the table on this stock for a really long time. I bought my first few shares of Facebook back in 2018. That feels like a century ago. And I think they dropped to like $160 at one point. Well, right now the stock is around $260 as of recording this video, and I still think that is super undervalued right now. So I'm not going to go through every single detail again because I did talk about Facebook recently in a previous video, but let me just say that the balance sheet is fantastic. The growth rate is amazing. They're still growing sales by like 20% plus per year. Forward PE is under 20 according to Yahoo Finance, which is absolutely crazy. Now, forward PE might be slightly different depending on who you ask, because it relies on estimates, right? So if you look at another website, it might be different than what it says on Yahoo Finance. But in general, I think that everyone does agree that Facebook has a forward PE of under 25 at the moment, which to me is way too low for what Facebook is. So one thing I do want to point out is that I really haven't talked about growth in the virtual reality business of Facebook. So in case you guys don't know, Facebook owns Oculus, which is a company that makes those VR headsets for gaming and for whatnot, right? You can use it for other things as well, like virtual house tours and stuff like that. Right now, though, according to the latest data, 2% of all users on Steam now has a VR headset. And in terms of market share, Oculus Salesforce is dominating, as you can see. And I see a lot of people on the internet trashing Facebook, and I completely understand. Okay, so I understand that Facebook does not have the best reputation out there, and regardless of whether or not, though, if you agree with their business practices, the numbers don't lie, and the numbers are saying that people don't hate Facebook enough to actually stop using their products. So I'm very confident that Facebook will perform well in the long term. If you just look at growth in their virtual reality business, as I said, but also growth in like Instagram and WhatsApp, even though the core platform of Facebook's business, like the Facebook, the website, you're saying that, oh, that's dying, like no one's using that anymore. Well, they're becoming less and less dependent on Facebook.com, and their other sectors are growing like crazy, right? So again, I'm very confident that Facebook will continue to perform really well in the long term. So anyways, that's stock number 1. Now let's move on to stock number 2 that I think is a deep value stock. So stock number 2 is Salesforce, ticker symbol CRM. And I'm sure that at least a lot of you have probably at least heard of Salesforce. They make enterprise cloud computing solutions that have a focus on customer relationship management. So they build software that allows a team to work better together, as well as handle interactions that a company has with its customers, and they leverage cloud technology doing that. And it wasn't too long ago that Salesforce announced that they were buying Slack Technologies. And when the news came out, the stock actually dropped. So I think that it was because investors were pricing in the cash that they would have to spend to buy Slack. And in my opinion, that was really short-sighted. Yes, the cash balance would obviously go down when you buy something, right? Like that's how like buying things work. But if you look into why Salesforce bought Slack, I think that people are not really seeing the potential. So with this Slack acquisition, Salesforce is gonna integrate Slack into its existing software, and Slack is already a leader in revolutionizing the way that we communicate with each other at work. So if you've never used Slack before and you're just using Skype or just plain old email at your workplace, and you switch to Slack, I can guarantee you would never want to switch back to Skype or like plain email or anything like that. And I've seen interviews with the Slack CEO, Stuart Butterfield, as well as the Salesforce CEO, Mark Benioff, and they're both visionary CEOs that I have full confidence in both of them. So if you look at Salesforce metrics, it doesn't really look like they're necessarily deep value at first, just because if you look at the metrics, they kind of seem high, right? But again, I think that Wall Street hasn't really recognized how fast the business is growing and how fast it can grow and how beneficial the Slack acquisition can be in the long term. And analyst estimates have them at growing like 20-ish% or low 20-ish% per year. I think that they're going to actually grow much more than that. If you just think about how much demand there is for like cloud-based solutions and the solutions that Salesforce is providing, I think that is going to be growing much more than 20% per year for the next few years. I mean, we're talking about a company that has consistently beat earnings, and on their latest quarterly report, their EPS numbers came in at like twice as much as what analysts expected, or more than twice as much. So all in all, I really like this stock, and I really have a hard time just seeing how you can lose money on this stock in the long term, right? I have a hard time seeing how you can not make money on this. So anyways, that's stock number 2. Now, stock number 3 is Rocket Companies. And I'm not talking about SpaceX or Virgin Galactic, like the name of the company is Rocket Companies. And they're the company behind Rocket Mortgage and other financial services as well. They have like loans and whatnot as well. So this stock recently came under my radar, and I gotta say I'm very intrigued. So they have this app that makes it easy for you to get a mortgage, and they help streamline the process. So they don't actually originate the mortgage themselves. Instead, what they do is that they act like a middleman that sits in between you and your financial institution, and it help like facilitate the loan and everything. So what's interesting about Rocket is that they maintain the right to service your mortgage. So you deal with them directly instead of dealing with like the third party or whoever like the mortgage dealer is. And I think that this is tremendously valuable when you maintain a direct relationship to a customer that helps you build rapport with them, right? So as for the customer, there could also be benefits with using mortgage as opposed to going with the other company directly, right? So they have technologies that can help you. What they can do is, for instance, if your house is available for refinance at a lower rate, they could send you a notification and just be like, hey, do you want to refinance your house at a lower rate, right? And it makes it easy for you to just electronically sign the document right within the app. They can really customize the customer experience. So I really like this idea, and I like the business model to make like the mortgage and like insurance and loan industry easy. So I think that there's massive potential in this. It's not something super sexy like virtual reality or some super high-tech software. However, let me point out that the forward PE on this company is like 10. Okay, so if you ask me, that the reason why it's so low is because Wall Street just treats them like any other mortgage company rather than a tech company. So Wall Street does not think of this company as a tech company at all. It's not like they're going bankrupt or something, right? In fact, the opposite is true. Their business is benefiting quite a bit from historically low interest rates. And I think that rates are going to stay low for the foreseeable future, which should be a great catalyst for rocket companies in the kind of medium to long term. So I do see that there's a lot of like growing catalysts for Rocket. This company is very interesting. I haven't bought any shares myself, but I'll be looking into it a bit more. And I think that this could be sort of a deep value because this stock is really cheap right now. And by really cheap, I mean like the valuation. So like when I say a stock is cheap or expensive, I don't mean like the actual price of the stock. Like that has nothing to do with whether a stock is cheap or expensive, right? But in terms of valuation, this stock is actually really cheap. And I might just pick up some shares just cause, So anyways, those are 3 deep value stocks that I think that could potentially have a little bit of a run in the future if it just goes back to its fair value. So I'll leave the video here for today. Be sure to hit the like button if you haven't already, and consider subscribing if you haven't already. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye.